When you should leave your 2 to 3% interest rate. Hey everyone, thanks so much for joining me. My name is Jeff Trevarthen. I am Jeff the Mortgage Pro. I really do appreciate you watching my videos. And if you could do me a huge favor, if you like all my content that I'm putting out, if you could please subscribe down below and also click the like button, I would super appreciate it. Trying to become one of the top loan officers on YouTube, and your support means the world to me. So let's jump right into it here today. What happens if you got a 2 or a 3% mortgage back in 2020, 2021, maybe even into 2022? And what do you do if you have to get out of it? Like, what are some ideas of what are the reasons why you would have to leave that 2 to 3% interest rate? So let's give you 5 different ideas. Number 1 is the need for emergency cash. In some instances, you may have an emergency investment or an emergency debt that you have to pay. And in those instances, it would be very beneficial for you to have some extra money on the sidelines. Now, most likely your house has gone up in value from the time that you bought it or the time that you refinanced it back in the early days of the pandemic, where you were getting the 2 to 3% interest rates. So if you were to refinance it today, there's probably enough equity to be able to have you take some money out and use that for other purposes. Now, you're going to leave your 2 to 3% interest rate if you do that, but at the same time, that's still the cheapest money that you're probably going to be able to borrow right now. Number 2 is, what if you were to switch to a short-term loan? So for example, let's say you had a 30-year fixed mortgage and it was 3.5%, which is still pretty good. And in the future, you were able to switch it over to a 20-year fixed or a 15-year fixed or even a 10-year fixed, and you're able to save a significant amount of interest on that loan. Even though the loan payment might be a lot higher and the interest rate might be a little bit higher, you're also cutting time off of that loan, which would save interest in the long run for you on that particular loan. So number 2, shorter term loan. Number 3, if you were to eliminate mortgage insurance. So one of the only ways sometimes that you can get out of mortgage insurance, especially if you're talking about FHA type financing that you have on your property right now, is to refinance out of it. Or if you had somebody on the loan that you don't want on the loan anymore, you have to refinance out of it. So those might be an instance where you would have to leave your 2 to 3% interest rate mortgage. Number 4 would be switching to a fixed rate mortgage. So let's say back in 2020, you bought your house in the fall and interest rates were super low. And so you decided to use an ARM loan because those were even lower than what you could get on a fixed rate loan. And you decided to go with that path to get you into the property that you were looking at. And the property's appreciated tremendously over the last couple of years. And you want to get out of that ARM loan because it may adjust here in the next couple of years. And you don't know what your payment's going to be going forward. So you decide to switch over to a fixed rate mortgage. This would be another reason why you could or may want to switch out of your 2 to 3% interest rate mortgage. And then the last thing here to help us or to figure out why you would want to get out of a 2 to 3% interest rate mortgage is debt consolidation. And this is really common, actually, believe it or not. I've seen several clients, I've had several people reach out to me, especially as of late, where inflation has really pushed up over the last couple of years. And that's caused people to take on more debt than they've ever had to take on in their lives. So debt consolidation is a big one because maybe you have a 2 to 3% interest rate mortgage, but you also have $25,000, $30,000, $40,000, $50,000 worth of credit card debt, car loans, things that have really pushed up in terms of cost and expensiveness. And those things can all be rolled into your mortgage, assuming you have enough equity in your property to be able to do that. And it may make sense on a cash flow basis, a monthly cash flow basis, as to whether or not you leave your 2 to 3% mortgage and move into a higher mortgage. And then the reality is that might be a temporary solution to help you consolidate all that debt. Whereas in the future, you may be able to refinance into a lower payment as interest rates come back down here, hopefully in 2023 and 2024. So those are a couple different examples for you that may be important for you. So 5 different examples actually of what you can do if you have to leave your 2 to 3% interest rate. So what do you think? Is there a situation other than those five where you would leave your 2 to 3% interest rate? I mean, is it death? Is it divorce? Possibly. Please leave your comment down below. I'd love to hear more about why you would do it, or if you are going to do it, how can I help you? And then the last thing, if you need to run the numbers on this, like let's say you have a lot of credit card debt and you need to run the numbers and figure out, hey, how can I improve my monthly cash flow? Please make sure you reach out to me. I'm happy to do this. I do this all the time. And I'm happy to help anyone that is looking to better their financial situation with a cash out refinance in that example. Okay. Thanks so much for watching. I really appreciate it. Look forward to chatting with you on the next show. Have a good one. Bye.